Very good afternoon, everyone. Welcome to yet another uLaw webinar. The title for today's webinar is going to be Disbursements Demystified, and today's webinar has been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. I repeat, the title for today's webinar is Disbursements Demystified, and it carries 1 hour of professionalism CPD credits in the provinces of Ontario, New Brunswick, and British Columbia. You should be able to log into your corresponding Law Society web portals or client portals and then use this title and claim your 1 hour of CPD credits. As always, we encourage you to use the chat window at all times to ask any questions. We request that if you can turn off the video if by accident you've got it on during this session. And of course, please keep asking your questions, and both myself as well as the support staff from uLaw will be more than happy to answer them as we progress. If you're listening in using your laptop or your mobile device, and if for whatever reason the audio quality is not great, please do use the option of dialing in, and the phone numbers have been provided on the chat window as well as the emails that you should have received. All right. So with no further delay, let's move forward. And like every other uLaw webinar, today's webinar has this specific agenda. We're going to be talking about disbursements, a major component of your legal office and an important component that is often overlooked. It's not given the amount of attention that sometimes it requires compared to legal fees, but we're definitely going to talk about the importance of disbursements, how best to manage them, and how best not to lose money as a legal firm on these disbursements that are not recovered because of certain best practices not being followed, right? So we're definitely going to talk about the options you have paying these disbursements, both from a trust as well as a operation account or general account, the benefits of both these approaches, the types of disbursements that you can manage out of these two different vehicles or financial vehicles that you could use to pay off these disbursements, right? And last but not the least, the necessary bookkeeping guidelines, the expectations from the individual law societies when it comes to you as a legal firm or owner showcasing the story behind how you've recorded and managed your disbursements, the history of how you've spent for these disbursements, how you recovered it, if you have, and which accounts did you use to do that. So we're definitely going to talk about the expectations from the Law Society in terms of bookkeeping. Okay? So predominantly it's going to be me walking you through this. We've done these slide shares and we've done this presentation a few times in the past. So if you're just revisiting, hopefully during the end of the session, when I walk you through the whole idea of how you can better do it with a legal accounting system, I'll see if we can introduce some newer features and reports that make this more interesting for any repeat audiences joining us today. All righty. I'm going to deny any presentation, so you're pretty much stuck with me this afternoon. So what is a disbursement? We're definitely looking to define this line item. I'd like to really jump into the layman's term of it. And we've got the definition from Wiki, we've got the layman's term, the accounting terms, and the Law Society's terms. So I'll start off with the layman's term. The disbursements really are expenses that you as a legal office incur on behalf of your client and wants to further on behalf of your client's specific matter, okay? So often when you're running these files, if disbursements are part of that area of practice, often legal offices or law offices would have to pay for these expenses that you would incur as part of processing or working on that matter or file. So an application fee, a court fee, common examples. You could also have other types of disbursements such as fax, print, even stamps, various different expenses that you incur to represent and process a particular matter or file, right? And the understanding of this disbursement is that you are paying mostly on behalf of your client, and hence it's left to you how best you within your legal firm would manage how you pay for it. Do you want to pay it out of your general account, in which case you have to recover, or if you're going to be paying out of your trust account, then it's just a little bit more of paperwork to show the audit trail. So those are the two immediate different opportunities that you have, how best you can manage those, right? From an accounting perspective, because everything now falls back, because these are numbers, these are finances, they do have accounting principles, and they do imply to certain books and ledgers behind the scene that are part of that bookkeeping that you need to do as part of your legal office. And from an accounting perspective, essentially these are books that are required for either your bookkeeper or your accountant or yourself to manage on behalf of your business. These are specific accounts of how you have spent the money, how you have the means and the timing in which you have recovered the money, mostly either through an invoice or to a trust transfer, right? And from a law society standpoint, of course, when you are being audited, you're definitely going to be audited for management of those proper books. Now, we spoke about how you as a legal office would have to manage this because this is, of course, on your turf to manage. And here are two options that we like to present to you to keep in mind as you think about if you're a growing office or just started off or have been doing other ways and you want to consider one of these two, or both in some cases. In terms of the key steps of managing these disbursements or paying for these expenses ahead of time, the beauty of being, of course, in the legal business, or as one of the advantages, let me put it that way, of being in this is the fact that if you are using your trust account, assuming that your legal office does have a trust account with a financial institution, and when you open up your business, and if you're in the business of accepting retainers as part of that initial retainer that you sign with your client, the trust account is a safe and easy way in which you can disperse or pay for these disbursements expenses on behalf of that client. Okay. The other aspect, of course, is that you are paying for these expenses out of your general account or your operating account, again, an account that you probably open up with your financial institution as well. That being said, the steps and the process, there are certain definite steps that are required, and those are important steps that need to be captured as part of the audit trail of your ledgers and journals that are important for you to keep in mind. First and foremost, something that we emphasize quite a bit here at uLaw, as well as talking to our clients and across all our webinars, is as a legal office to always have a process or a methodology to better record the activities that happen within your legal office as close as they can be to the reality. So as and when it happens, if you have a methodology or a process to capture or record those activities, the better you're helping yourself, both for bookkeeping as well as for balancing your books and the reconciliation. Now, disbursements are one such activities, and hence they're no exception to that. So you need to find a better way that you can record these disbursement activities as and when they happen. Now, every activity, financial and non-financial, has a certain key characteristics to the transaction itself, right? So from a disbursement standpoint, which is really a financial transaction, you pay for an expense ahead of time. Some of the important components, elements, characteristics, however you like to call them, include when was that disbursement paid, right? Very straightforward, really wanting to know when was it paid. Next comes, how was it paid? Of course, there's no order in which you ask these questions. As long as you're covering them all, that's perfectly fine. but really, when was this disbursement paid? How was it paid? So that comes to the question, hey, did you use your trust account to pay for this? Did you use your general account? If it is general account, then you have, of course, multiple, other ways in which you could have paid. You could have paid this out of your personal account, owner's pocket. If it's a general account, you may have used a credit card or maybe your checking account, right? So there's different ways in which you may have eventually paid in real life. So really, documenting or recording how it was paid, very important to help you reconcile the books. And of course, what was the reason for this particular transaction to be delivered? Now that's more for your internal bookkeeping, but also to be made available across journals. Examples such as the application fee, court fee, helps not only you remember it when you have to go back in time to reconcile it, but also makes it easier when you're showcasing it to your auditors for ledgers and journals, but also most importantly for the sanity of your own in-house bookkeeping, to just have a better handle for what was these expenses paid for. You don't want to see a random line item that says $24.46. There's more value to that number if you have all these characteristics that better define that value of $24.46, right? That comes to the final important question, was the amount that was paid for this disbursement, right? We've looked at when, we've looked at how, we've looked at the reason, and of course the bottom line is how much is the amount. The importance of the amount, especially in the Canadian context, is understanding if there are any jurisdictional taxes that you paid as part of that disbursement, right? Certain types of disbursements do not have taxes involved. For example, court fee or application fee typically don't have a tax involved. So if you're in the province of Ontario, there's no HST for an application fee, let's say. If you're in the other provinces, GST, PST apply accordingly. Some expenses may have disbursements. So if you've had let's say a meeting and you've paid for the dinner or lunch, and let's say that's part of the disbursement deal as part of your retainer, then you may have paid HST or GST, PST as part of that. That could be part of, let's say you had to go out to the nearest Walmart or any other store to send out fax machines or fax out certain documents because your fax machine was broken, then you may have paid HST. So the fourth aspect of that transaction is to understand the amount with the specific emphasis on the tax component of that amount. Now, those are the top 4 questions that you need to find a way to record as and when these things happen, whether you're using a manual system, an Excel sheet, third-party systems, legal accounting, whatever may be the sophistication of the system you have. Now, the overarching question about all these 4 characteristics is really the next line item, which is the client, and more specifically, the file or the matter that this particular disbursement applies to. So this can't be a random transaction, especially because this is client-related. This is payment of expenses on behalf of a client, and hence it's only fair for the Law Society to ask you, all right, who is the client? Now, the nature of the business where you may deal with multiple files for the same client comes the next granular subsection of this, is to have a better understanding which matter for the specific client was this disbursement applied to. So you could have a same client, right, Jim, and you could have multiple matters for Jim. You could have a real estate matter. You may have a criminal matter. So what was this particular, application fee for? Very critical for you to document, record the client's name and the file number or matter relates to it. Now that we've understood the 4 or 5 different important characteristics that you need to record as part of that disbursement, now we move to the next aspect of it, is how do you intend paying for it? So that's the important, how was it paid? And as you can see here, there are certain audit trail or transaction elements of the direction that you take. So if you're going to be taking the trust route, Okay, so let's move on to this next slide. So these are the two different directions that you could typically take and mix and match between these two, yeah, in terms of how you would go about paying for these client-related expenses, disbursements. The first route is paying this out of your trust. And we've said keep it simple here in brackets because over a period of time, if your legal office does have a lot of disbursements to deal with, it might just be simpler for you to pay off these disbursements through your trust account. Of course, with the hope and leap of faith that you have taken the money in advance as part of a retainer, right, from this client. And many legal offices are very smart where they kind of have a good ballpark estimation of the type of expenses that they may incur. And hence, they do ask for a slightly higher retainer that can pretty much cover the fees or a section of the fees in some disbursements, at least as an initial retainer. And then they do ask for incremental top-ups, of course, based on the nature and area of practice. But if you are paying from the trust account, then within that, of course, there are two components of it. Let's assume you've got a retainer. Just because you've got a retainer doesn't mean that you do have to use the trust account to pay for disbursements. We have a few legal offices who we work with as our clients who do take a retainer. So let's assume they've got a $1,000 retainer from their client. They've got a $500 legal fees plus the provincial taxes, let's say of $65 here in Ontario. And they ballpark about $300 of expenses or disbursements, let's say. So $865 in total, and kind of a rough ballpark, let's say. Now you could still take that retainer, put that $1,000 into your trust account, but use the general account to actually pay for that $300. So use your personal credit card. Maybe you're getting points on it, or maybe it's just easier for you in your mind to be able to just pay for it to your general account. And if you're doing that route, then it's important that you generate what's called as an invoice to clearly reflect the amount of money that you're going to be asking from the client and the amount of money that you have just earned and moving that money from trust to general. So the first step is you have a retainer, but you're not using a trust account to pay for disbursements. You're still using the general account, in which case you would have to generate an invoice, just reflect what the disbursements are, and then move the money from trust to general. You're not waiting for the customer to pay for it. So this is still good because you do have the ability to cover your costs. The risk is slightly mitigated. The route of taking the general account, and I'll come to trust finally so that I can show you the amount of work that needs to get done. So if you're using the retainer non-trust disbursements, now you have the need to generate an invoice, which is a paper trail, one of the important steps that you do have to remember to take. And you've got to send the invoice and then do the trust transfer. And if you're doing the trust transfer, let's say in the province of Ontario, if you're doing this electronically, because of course we're in that phase of COVID right now, and let's say you're doing this online, then you do have to fill out, let's say, Form 9A. So already, you know in your mind you have two documents that you have to deal with having taken that route. Now to add pressure to this, let's assume you did not have a retainer to begin with. You just started working for this client, maybe a leap of faith, maybe it's a friend's friend, and you paid for these disbursements right out of your general account, and there's no retainer involved. Yeah. Now you have the third component or pressure point of how best you can recover this. Now you do pay for this in advance out of your general account, operating account, which does affect your P&L if you don't recover it in time, right? The second aspect is, of course, like the first option, you do have to invoice, because the invoice is the legal document that articulates the amount that you're going to recover. But in the first case where you did have a retainer involved, you were just doing a trust transfer because you already had the money locked. Whereas in the second example where there's no retainer, you have to now generate the invoice, send the invoice for that $300 to the client, and now wait for a payment because you don't have a fallback of a trust or a retainer payment that you could use and dip into for that money to recover. Here's where it becomes tricky. When did you generate that invoice? Which time of the month and date? How long did your client take? What was written in your retainer as your typical payment terms? Then it gets convoluted. If they haven't paid you on time, are you going to be charging them interest moving forward on those disbursements? If you haven't received disbursements, are not able to recover that cost because now you're in a bit of a dispute, then you need to write it off, which means it's going to affect your bottom line. So this is really why we talk about typically using the trust account if you can, and something for you to keep in mind and consider to keep it simple. So now let's take this third, and I'm going to flip this to the first line item that you see here. Why not pay straight from trust? Right? This is why it's simpler. Because in the other ways, you do have additional tasks to take, and if it's completely general, then the onus is on you to have done the due diligence while picking that client, making sure that they will pay you on time. If you don't want to take that risk, and if you are able to, you do ask for that initial retainer. Let's take that same example. $1,000 getting into retainer. You've got $500 as legal fees. Let's keep that alone. You've got $300 of disbursements. So in the ideal keeping it simple process of paying it from trust, what you would do is you would actually pay the 200 plus 100, whatever it may be, for disbursements of the 300 amount directly from your trust account, assuming you're writing a trust check. Let's say that. You have a trust account and you're writing the court fee or an application fee directly and paying out of your trust account. So when that check does clear, that money is taken right out of the 200 or 300. And that is smart because you've earmarked that $300 of disbursements. It was never your money to begin with, unless you were looking to make a little bit of a profit on the disbursements, which is typically not what we see with legal offices. It's better to recover the money than to, and not lose the money than to aim to make a little bit of money as profitable from disbursements. So in this process of how you pay for it from trust account, keeping it simple, you do not have to generate an invoice. You do not have to wait for the customer to pay you. And you don't have to do any trust transfers from trust to general to recover the expenses. The money is in the trust account, and money was spent from the trust account appropriately for that earmarked disbursement for which you've already taken the money in advance as part of the retainer. That's the assumption, right? The assumption is that you have planned for it ahead of time and taken a little extra to earmark for that disbursement. So you've already saved yourself 3 steps that you don't have to do otherwise to recover that money. So hopefully this was clear, though I did kind of go about their other way of showcasing why it's simple. You have 3 choices, and if you're going to pay right off trust for disbursements, we believe it's a more simpler bookkeeping process at the least, if you can plan your everything else around it. So if you don't have a trust account, of course, now you have to go to the financial institution and open a trust account. That's a starter. Of course, now if you do have a trust account, you do have to kind of plan to ensure that you have all of your trust-related documents in line, ledgers, journals, and your reconciliation document. But if you have the right tool, the right product, and the right help, in today's day and life, legal tech is so powerful and so advanced, these are becoming easier. It doesn't have to be the old school manual way. There are simpler, faster, cost-effective ways in which you can manage these books. But keeping the trust as part of one of your financial vehicles allows you to be better planned, profitable in your overall legal business. Okay? So real quick recap, because this is really the essence of disbursements. Disbursements which are paid on behalf of clients from your legal office, you're required to capture the 5 important questions: the client for whom this disbursement was paid and the specific filer matter, when was this paid, how did you pay for it, the reason for that, and the amount, including taxes. And when it comes to understanding how you paid for it, you have these three different routes. Paying it completely out of general account, no trust involved, which includes paying in advance, making it part of invoice, and then you are now at the mercy of the client to pay you. The second step is you do have a retainer, which does save you a little bit, but does involve additional steps when you paid out of general, where you have to generate that invoice still, and then do a trust transfer from the trust account to the general account, and ensure it's the eligible trust transfer. So the disbursements cannot be for $300 as part of the invoice, and you can randomly move $400, because that's what the auditor wants to make sure that you haven't done. And the third, the simpler option for bookkeeping and paper trail, is taking the money in retainer and paying it off from the trust account directly for the disbursements. No invoices to raise, no Form 9As or trust transfers to deal with, and no waiting on the customer to pay you for the disbursement. Okay? Alrighty. So if you are recovering, so let's say you're not doing the trust, we would like for you to start considering using the trust, but let's say the reality of life is that you are currently still paying for this and recovering this expense, which means either you're moving the trust from trust to general or you're waiting to directly collect the payment into your general account. One of the important steps we spoke about there is generating that invoice. Of course, depending on the type of business, the area of practice, you could have certain, for corporate clients, for example, sometimes they ask for additional documents, bill of costs, statement of activities, but definitely sending an invoice is how you free up that eligible amount to either transfer over or wait for payment, right? And when do you generate this invoice? Because this is another thing we start to see, because again, it is a paperwork that you do have to do at your legal office. But how and when you generate this invoice comes back to your engagement or retainer letter. Often we're asked this question. Corporate matters have a different type of invoice pattern. Sometimes it's just monthly, so you accumulate all of the disbursements that you incur for this client, right? You accumulate it all and then send them one consolidated invoice for them to review, pay off. And of course, you may have to attach all the receipts of the expenses that you've had. Whereas if it's a non-corporate matter, let's put it that way, the faster you're able to recover these expenses, the better it is for you. And hence, most often we find that retainer or engagement letters would say disbursements would be recovered as soon as they're paid off or paid for. So if you've just had a court fee, you want to come back to your office, record that disbursement within that client's matter, generate an invoice which should capture the amount, the reason, the date, all of that, the taxes, send that invoice to the client, and either do your trust transfer or wait for the client payment. So when you raise that invoice, comes down to your agreement with your client, but please keep in mind that's a very important step that you do have to take, especially if you're dealing with general and waiting to recover that disbursement. Okay? Okay. Now the next question is, what types of disbursements are ideal to be transacted using the trust account and general account? Because not all types of transactions are ideal for trust. If you do have a billable type of disbursement, which is typically the actuals that you're billing, so you pay the application fee of $100 to to the Ministry of Attorney General, that's exactly the $100 that you're recovering from your client. Great candidate for trust. If it's a travel time, so let's say you charge as part of your engagement letter, you're going to be charging for travel time to move from one city to another maybe, or you may be using mileage, sometimes both. Or in the case of unit rate, so let's say you're going to be charging for printing. Let's say you charge $1 per paper. If there are 100 papers that need to be printed, then it's $100. Sometimes if you're printing it in-house in your office, then you don't charge taxes. If you're now stepped out to go print it at a Staples or a Walmart, then you may have incurred taxes. Then the question is, do you pass on the tax to your customer, or do you pay for it and not charge the customer? So in those types of instances where what you've paid is really not exactly what you're charging, which means either there's a profit margin or there could be a possible loss margin in that transaction, then it's highly recommended that you only use the general account to pay for it. Okay? So, a good thumb rule, if the recovery of expenses on actuals, then both trust and general are the right financial. You can use either or both. If it's not on actuals, and if it's a profit or a loss margin, then only general. So that's pretty much the thumb rule. Okay, so we've now discussed disbursements. We've kind of discussed what needs to be recorded, why it needs to be recorded, how often do they have to be recorded, how do you reflect what you recorded in the form of invoice, how do you recover that money, whether you use those 3 different routes that we spoke about. Now, we've done all this good work. Then comes the final aspect of the Law Society's compliance, which you're bound by, and having an understanding now of what is really expected. So it's not a random act. You're not going to be randomly asked for something that you do not know about or nothing out of the box that hasn't already been documented. The bookkeeping guidelines for all the provinces in Canada clearly articulate the boundaries and the guidelines, if you will, and the expectation and the type of templates and the type of data that is expected out of your legal firm as part of those audits, whether they're spot audit or planned audit, right? And there's some important documents that tell the story about the audit trail of your disbursements, right from the time you recorded them to recovering them. So depending on whether you use trust account or not, if you do, then one of the important documents you want to keep in mind is the Disbursement Ledger, right? And we've seen this in our previous webinars when it comes to financial bookkeeping, reconciliation, Law Society financial document bookkeeping, right? You have ledgers and journals. Very subtle but important differences between these 2 documents. Some may quite argue, why do I not combine them into one document? But that's, of course, for another day, and there's definitely a method to the madness. When it comes to disbursement, you do have the disbursement ledgers for both your trust account and the general account that are going to be reviewed to tell you that trail. Because every transaction that's recorded or dispersed, as the legal lingo or the accounting lingo, they need to be recorded in these ledgers. Whether that transaction originated or was transacted using the trust account or general account will determine which ledger that transaction is recorded under. Very straightforward. And like all ledgers, the disbursement ledger also has a running balance by date. And this is, of course, an example. And I can definitely, during the end of this webinar, we do have another 20-25 minutes left. I will walk you through a typical Disbursement Ledger using uLaw as an example of a legal accounting system. But if I were to draw your attention to this trust ledger, you're going to see for Kim Kirby, on August 30th, you had a receipt of $40,000, and then there was a disbursement that was transferred to Taylor for that $40,000, leaving the balance at zero. There was a retainer received of $565 for another client, Peter Piper, and that was then transferred over through that invoice. And if you look at the general ledger here, you're going to clearly notice that there's a $100 fees plus the appropriate taxes, and you see the split up between these amounts. Of course, this is not the ideal example of having certain disbursements in play. Let me show you that as we move forward. But just so you understand the data components that are involved in these templates, you see the date that the transaction or the disbursement occurred, the particulars, which is why did it happen, how much was the money, what was the balance. In your case, in the disbursement journal, of course, you would have how much money was paid for. So let me show you the trust disbursement journal. You see the date when that particular disbursement happened. How did you pay for it? Who was this paid to? What was the purpose and the specific client for whom you paid this amount? And the amount itself. Okay. And the last document, so you have ledgers and journals to maintain, and we're going to walk you through it real quick. And then another document that you sometimes is overlooked is the fee book. The name of the webinar is Disbursements Demystified, and it's for 1 hour of professionalism CPD credits for those who just joined us. So one of the aspects of the disbursement for you to keep in mind, don't want to confuse you beyond a point really here, but this is a recoverable expense, right? So it does make its way into an invoice. So you are asking for money from your client. So for a brief moment, it is definitely part of your revenue. But then because you've already paid for it in advance, it kind of matches the expense and the revenue and balances it out, right? With the disbursements, you're trying to minimize the amount of loss rather than anything else. And hence, the disbursements do make its way into the fee book. Because the fee book does record the fees as well as any disbursements that were included as part of an invoice that needs to be recovered from the clients. I really had to simply read it because that's exactly what the fee book is. And because it's a line-by-line item of every invoice number and the associated client for which this was associated, it also includes the appropriate taxes. So I've got the example of HST here, but of course, give me 1 second, please. I think the disbursements. So the title, and I've mentioned this in the chat box too because people are asking for it, it is Disbursements Demystified. Okay, so I know we went through that real quick. So after having discussed the concept of disbursements, the only thing that you want to take away from this webinar in terms of Law Society documents or in terms of disbursements specifically in that are the ledgers, the journals, and the fee book. Okay? So these are important documents that you do have to create. Of course, it's expected to be in a typical template. Now comes the final step of how do you as a legal firm equip yourself with the right skills, the tools, and the process and methodologies to be able to do this day in and day out. For many clients, it's the same steps beyond a point, but having that bit of regulation, if you will, internally, a little bit of that discipline that's needed to be able to repeat that success every time so that you're not missing out on these disbursements. Because one of the reason why we even have this webinar to begin with is as we helped clients move over into our platform, we were often asked this simple question of how can I better recover the disbursements because I really don't have a handle on it. And many of these individuals, let's say, were using a paper trail prior to this. And a simpler answer, of course, is to be able to use first and foremost a legal accounting software. The legal accounting software, of course, is purpose-built of dealing with not only the financial aspects and the bookkeeping aspects of your day-to-day operations. Many legal accounting softwares are also purpose-built to give you this final set of documents that are important from a law society standpoint for compliance. And what it also facilitates is proper data entry, because data in is data out. And again, I don't want to preach to the choir here, but no matter what process, methodology, powerful software that you use in your life, it really comes down to the discipline of you entering the data into it and putting the minimalistic amount of investment that you should in learning the software or the process or methodology to repeat that success every time and being able to do it in a continual manner without fatigue. Software, of course, reduces that final word that I mentioned. If you're doing this manually, then there's a possibility, based on the number of transactions that you may have, to have a bit of fatigue. Software, because the nature that it is software, that once you've decided to do it the right way, being the legal accounting software, the templates, the workflow, the data that it captures, restricting you from over withdrawing on trust, ensuring that you can only transfer the eligible amount from trust to general. So those types of workflow elements, of course, assist you and reduce the amount of fatigue and manual errors that you potentially may make if you're doing this the old school way. Yeah. So it's just something for you to keep in mind and explore. Of course, you have many options. We continue to repeat this, though we are a player in this space. We're very happy and proud for the legal tech community to have grown over the past 10, 12 years, empowering our legal practitioner friends to have choices, which they did not have 10 years back. There were limited options to choose from. With the advent of technology and the power of the internet, if you will, and now because of, necessity is the mother of all inventions, so you do have the situation that we're in that has facilitated a better opening. You have a lot of options to explore, and we're one such option that you can think about. But do think about the right tool that means business to you, but keeping these important guidelines of how best to manage disbursements in your legal office. It's probably the longest English statement I've made in my life. I'm sorry about that. So that was pretty much my last slide for this webinar, right? So we still do have about 15 minutes. I'm going to do a quick recap for some of our friends who did join us a little bit late. I know it's a Friday afternoon, so we do apologize for the timing. So today's webinar, as a quick recap, is the title for today's webinar, rather, is Disbursements Demystified. It has been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. So for friends joining us from these 3 provinces, please do log in to your Law Society portal, write down Disbursements Demystified, and that's the title that you would use to get your 1 hour of CPD credits. And what did we cover in this particular webinar is essentially talking about disbursements as a concept, the definition of it, right? We looked at expenses that you pay on behalf of your client, and specifically on behalf of a client's matter from your legal office. It's your onus of how you spend that money. And the important characteristics of these disbursements, the top 5 questions that you do have to record: the when, how, what was the reason, how much was the amount, who was it for, and what was it for in terms of the client matter, right? 5 questions, 5 important characteristics that define that disbursement better. And when it further comes down to how you spent it within your legal firm, the options that you do currently have. Yes, it is for 1 hour of CPD, yes. So when it comes to how did you spend the money from your legal office, we spoke about trust with general, and just general. And we looked at the different options. The more audit trail, the more bookkeeping, more paperwork, the more complicated for you to keep in mind. If you are able to use the trust account, get that money in advance and just pay off that disbursement from trust if you can. It is a rather simpler option when it comes to the amount of work and paperwork that you do have to do. When do you recover that expense, or that disbursement rather? An important step to take, of course, is to be able to invoice your client with the disbursement component in that invoice, which makes it also part of your fee book. But when you invoice that client, the timing of it, as I mentioned earlier, comes down to your agreement with your client on that retainer or engagement letter. Different types of clients, different types of matters, and they all have their own path of how you would invoice. Corporate clients may be on a bi-weekly, monthly basis, which accumulates all the transactions that have occurred so far. For sometimes the non-corporate clients, what we've seen most often is pretty much right away, as and when it happens, so that you're faster at acting to recover that. The types of disbursements, of course, we looked at the 2 quick thumb rules, if you will. If you're recovering the expenses or disbursements on actuals, both trust and general, if they're not on actuals, does have a profit or loss margin, please do use the general account to pay for these disbursements. And last but not the least, looking at the Law Society documents, Disbursement Ledger, Disbursement Journal, looking at the fee book. Of course, last but not the least, how do you accomplish all of this besides all the other work that you do have to do as the strong entrepreneur? Is choosing the right tools, process, methodologies, whatever is comfortable to you, to facilitate, reduce the fatigue and the manual error. All right. Having said all of that, let me give you kind of a quick view. So this, what I have here is the uLaw platform. We're a Canadian company based out of Ottawa. Legal accounting is what we breathe and do every day. So we're a practice management, legal accounting, and business accounting software. But just to kind of go over all the concept, first and foremost is to, of course, have a client and create a matter for the client, because that's the context of the disbursements too. So let me go ahead and create a client. For the purpose of today's demo, I'm just going to say this is Miss Mary Thompson without the P. There's a client referral who lives in Ottawa, Ontario. Let me just quickly set the context. Of course, you could do conflict checks and all of that, but let's not get into that for today. We'll focus our energy on disbursements. If you've got a client, I'll just wait for that to be stored into the database. You should be able to see the name Thompson. Let's go ahead and create a matter. I'm going to start with the simpler one where I just say general, no trust involved, right? So the longer process. So let's say this is Mary versus Bob. Small claims. So let's say you know Mary. So I've logged in as Roger Moore, who's the ex-bond. Let's assume this is Roger's office, and he's using a legal accounting software such as uLaw, kind of a day in his life. I'm going to go ahead and just add a disbursement for the sake of today's webinar. I'm just going to go ahead and say, add a new disbursement, and I'm going to say this is out of general. So I've got fax, which is a unit rate. Let's say $100, maybe not charge taxes. Now, one of the important components of the legal accounting system, of course, is the fact that it's also behind the scene a full-fledged business accounting software. So really, for you to be able to capture how you paid for this is important. So I'm just going to go ahead and save that information. So that's the screen in which we capture those 5 elements that define the disbursement, right? So you have the date. So when, what was it for? You already have the context of the client and the matter, and how did you pay for this? In this specific example, we've just said this is paid out of the general account. Let's say this is paid to the ministry. I'm going to skip the whole paid this, so let's leave it at that. The next immediate step that you do have to do, and we mentioned the timing of the invoice, is generating the invoice. I'm going to say see that the invoice is pending. And let's go ahead and generate that invoice. That invoice should include this particular line item. For purposes of time, I'm just going to skip the preview and go ahead and generate that invoice. So with the automation of software, you're able to personalize the templates of these invoices based on your company's letterhead and so on and so forth. And there you see this invoice, very straightforward. It's invoice to Mary. It has that $100, and that's pretty much it. So you send this to Mary by email. This is a PDF document. And of course, I did throw in the fear factor of you have to wait for this person to pay. So of course, whenever Mary pays is when you can accept that payment. And only when you accept that payment are you typically recovering that expense, right? So let me go ahead and do that. So I'm going to go ahead and say, let me accept that client payment. Maybe it was a friend and she paid me right away. So I'm going to take that payment. Let's say it came through an email transfer. This is important too. Is how did you recover? How did they pay you? And give them a receipt. I'm going to hit apply. Client, matter, disbursement, invoice, client payment. 5 steps overall. And for this specific client, let's go through the bookkeeping compliance. So we spoke about the general disbursement. Let me first start with the ledger. I'll do it for the month. This is for the month of February. Pretty much we should contain all of the data in it. As that's running, I'll generate the general disbursement as well. And while that's running, I'll generate the fee book as well. So that's kind of the power, if you will, of the internet, the parallel processing of it. And if you look at this general ledger for our client, Mary Thompson, on the 12th, you did have a disbursement of $100. Of course, there was no taxes. And on that day, that was the balance owed. Now, because of today's example, I got it paid the same day, but in reality, this may have been paid later. This could have happened earlier. The dates, of course, would change based on the pragmatic nature of the business. But you did recover that $100, and that was through this email transfer that was done by Mary for that same amount. Now we look at the fee book. You can clearly see in the fee book that amount of $100, and clearly you state that there are no taxes involved. You've got the $100 that is part of that fee book. Okay, so this is the first example, if you will. It's pretty straightforward. Now with another 2 minutes remaining, and then this is one of my fastest record it will probably be, I'm going to say Mr. Thompson Ford. I'm going to skip all this, cut to the chase. I'm going to create a different client, and let's take the trust route, where we would take a retainer and then pay for these through the trust account directly, showing you the reduced audit trail and the 1 or 2 documents in which those transactions would now be reflected. In this case, this was the general books where it was reflected. If you're going to be dealing with trust, as the name sounds, you're going to be dealing with the trust ledger and the journal. Let me go ahead and create the matter. Let's just say this is a criminal matter, DUI. The first step, of course, would be collecting that retainer. So let's assume you've done the retainer letter. We have a few samples of that, so you do have different letters that you can choose from. I'm going to go ahead and say new retainer. Let's see, I received this earlier this week. So you can backdate this. So I'll say $1,000 to a check being deposited into my trust account. Okay. And we'll skip the legal fee. Let's just go straight into an application or maybe a court fee. Let's say that disbursement was directly from the trust. We just say it's paid from trust. It was paid on the 11th with $200 through a trust check. This is the reason for that. Who was this paid to? It's coming out of course, the trust account. So this is where legal accounting, of course, reduces the manual error. So there's no way of choosing a general account here. These are only the list of all the trust accounts that you have in your accounts. Of course, you can print this check and then directly print it on your laser printer as well, if you leave your check leaflet on your printer. Now, you're going to notice that this $1,000 trust receipt automatically reduced to $800. Now, I do not have to generate an invoice to reflect this because it's already been accounted for, right? So if I do my compliance, if I do my client's trust ledger, so let's say you get audited today, as and when it happened, then you can be very confident. Of course, the reconciliation is a different component of it, which I've discussed in a previous webinar. Whether that check of $200 got cleared and when it got cleared by the Ministry of Finance is another question. That comes into reconciliation. But the fact that it's been accounted for is what we're looking at here, and how it's being recorded and made available. So if you're Mr. Thompson Ford, the trust ledger clearly states that you received the retainer on the 10th of $1,000. That was the balance in trust. And on the 11th, you paid out the $200, leaving your trust balance at $800. So you can mix and match for that same client, right? For that same client, if let's say you paid out of general, because of the nature of that disbursement. And let's say this was a photocopies. Apologize. You can see the unit rate changing. So now you've got $100 or $200 here as photocopies, which is not paid out of the trust, but you still have a retainer of $800 left. Now you can go ahead and generate that invoice. And once you've generated that invoice, the first option that we choose for Mary, we said we'll do a client payment, which would have had to wait for Mary to pay us. But in this case, you do not have to wait for Thompson to pay you that $100. You can just do the trust transfer because there's money in trust. And you have that $100 of eligible trust amount. This is another aspect of legal accounting software that it restricts you not to overdraw on trust, which is a common error when it comes to trust management. One of the issues that clients do face. So you do need the flexibility, or this is one of the flexibilities that the legal accounting system provides. Moving it from your trust account to your general account of choice. You can either write yourself a check, or, as I mentioned earlier, if it's an electronic fund transfer, the additional paperwork jurisdictionally, if you're in Ontario, is to fill out a Form 9A. And of course, uLaw allows you to pre-populate that as well. Now, if I go into my compliance, I have a trust ledger, but I would also have a general disbursement. If I generate my fee book, with the legal accounting software, of course, the Law Society compliance documents become just a click of a button, provided that you have the data in. You can clearly see for Thompson Ford, that $100 disbursement for your photocopies as part of it. Okay? That's pretty much everything I wanted to cover today's webinar. I know I have gone slightly past the promised time, so I apologize for that. But I do thank everyone for joining me in today's webinar, Disbursements Demystified. And please do reach out to us if you have any questions specific to this webinar. If you have questions regarding our product, or if you're a client having support questions, please do email us at support@uLawPractice.com, and we'll be more than happy to answer those questions at the earliest possibility. Thank you, everyone, for joining me. Hope you have a fantastic weekend ahead. I look forward to speaking with you next Friday at 2 p.m. Thank you.